Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me this afternoon, we have Kevin Davitt, Head of Index Options Content at Nasdaq. We're here to discuss if recent moves in the market is a healthy pullback or if investors are in panic mode. Kevin, it's great to see you as always. Welcome back to Trade Talks, and this is what investors are asking. Nasdaq 100 ended yesterday nearly 8% off all-time highs. Do you view this past week as a sign of pullback or is it a panic session?
So I do think that's an important way or kind of a potentially proper way to evaluate the moves of the past couple of weeks. So are we shaking off speculative excess or are we in kind of the earlier stages of like a fundamental reset? And as you know, the kind of bubble talk has gotten a lot of attention. Now, from my perspective, the fact remains that for the past 3 years, drawdowns have generally been short-lived. And November is likely to be the first down month for the Nasdaq 100 since March. Even April, we closed higher. So I believe that's a testament to the power of optionality and why volumes do keep growing. Markets are repricing risk faster than ever now, and that is not just my opinion. Data validates it, and it happens on both the downside and the upside. So I think options offer the end user a really capital efficient way to potentially manage those swings, whether you're looking to hedge or gain like some tactical exposure in markets that are moving like this. Now, beyond that, like kind of bigger and broader, I think that avoiding bad investment decisions can be as meaningful or potentially more meaningful than making good ones. Now, obviously, there's gradients there. But once again, data shows that portfolios suffer real drag from poor timing decisions. So we show the drawdowns here in the visual. And if you think about just missing a couple of days this year, like on April 9th, when the NASDAQ gained like 12%, that's going to have a huge impact. Theoretically, you could have sold when the NASDAQ was around 16,500, and like 2 or 3 days later, it's 19,500. Now, options from a personal standpoint have allowed me the flexibility to sort of withstand swings like that and in some situations add exposure because I understand something like, just by way of example, a way out of the money, put butterfly on an index. And just to be clear, I'm not advocating for any specific trading, but that convex power is really, really important in scenarios or backdrops like we've had this week. I would argue that we're talking about growing access and understanding of the options market, and it's made for a more resilient investor class. I think we got a whiff of panic this week, but it still strikes me as kind of a garden variety pullback right now.
And Kevin, it's interesting because when there's big swings in the market, you start to get, typical conversation around the market plumbing. Have there been any issues with the swell and volatility from the options markets?
Yeah, I think that one and like going into Thanksgiving week, I think about how much we can take for granted. We take for granted that markets remain open despite volatility like this. They're deep and resilient. It's been on full display this week. So I think about a month ago on October 10th, the industry traded 100 million options. Yesterday it was like 88 million options, and we averaged 60 on any given day. I trade options on my own with some regularity, and I compare that experience to other transactions I have in consumer markets. And I think about like simple stuff like the grocery store self-checkout can be a pain even when there's nobody in there. I had an online shopping cart trying to get a couple of things for Thanksgiving just last night, and it was a real hassle checking out. I think about highways. You're in New York, I'm in Chicago. It's like constant construction and interruption. But the US options market stands up to all sorts of conditions, and it is a testament to all sorts of people behind the scenes that work on that. I would argue that Nasdaq's DNA is really kind of pushing markets forward with the technology lead. So from a broader perspective, Nasdaq processes like 30% of industry volume. So if we use yesterday as an example, Nasdaq handled somewhere between 25 and 30 million contracts, billions of messages, and that customer experience is kind of unparalleled. So long-winded way of saying thank you to everybody who works on the tech end there. And despite the pickup in vol, no plumbing issues today.
Kevin, sticking with that broader perspective, to what degree has recent volatility shifted the market outlook going forward?
Hmm. Um, on that point, I go back in my head to the previous one about how quickly risk gets repriced these days, and there's clearly been a sentiment shift this month. On a point like that, my tendency is to look at slightly longer dated index options for information. So what I'm looking at is like how sticky or reflexive are volatility expectations further out in time. Bigger picture, there's so much information embedded in the index options market. So from a visual perspective, we have a look at the money, Nasdaq 100, 1 year implied volatility through time. There's a lot of information on here. Try to break it down just a little bit. Now, am I likely to trade a 1 year NDX at the money straddle? No, I'm not. But I can look at this visual and I can see that volatility being priced at that 1 year mark moved from like 20% 2 months ago to 25% yesterday. The market is pricing in wider potential distribution of outcomes, both higher and lower. And then there's a whole bunch of ways to potentially dive deeper there. I'll take a simple one. So, how does 25% 1 year implied volatility compare when we look at different time frames? So, the average measure there for this year is 22%, and that would put us in the 92nd percentile for this year. And longer term uncertainty was only higher in April. So, it's clearly different than most of this year. But if we broaden that horizon, and that's kind of the point you brought up at the beginning, that average number is much closer to 24, and that paints a different picture of 1 year vol at 25. If you look at average for calendar year in 2022, it was 28 and a half. So my point here is that I have a whole lot more data to inform my decision making about whether I really believe things have shifted fundamentally. And that's why I believe these option markets are so valuable, whether you trade them actively or not. I think to really answer a little bit more directly, the low end for implied volatility has likely moved higher, but I'm apprehensive to say that we've moved into a systematically higher vol market.
So, Kevin, to wrap up here, what should investors keep their eyes on with respect to the Nasdaq 100 as we move into year end?
So from my view, there's a couple of really important points over the next couple of weeks for investors generally. In the very near term, I'm going to watch how semiconductors behave and consumer discretionary sectors perform. The Nasdaq 100 specifically is certainly sensitive to those areas of the market. I'd also point out that index reconstitution happens over the next month in December. So, following the December standard expiration, the NASDAQ 100 is going to look a little bit different, and other indices will undergo changes as well. Kind of in that vein, I also think about yesterday's Walmart Q3 earnings report. As part of that, they chose to switch their listing from NYSE to NASDAQ. And given their like roughly $850 billion market cap, and the systematic nature of the NASDAQ 100, at some point in the next handful of months, I would expect Walmart to join the index. To be abundantly clear, they wouldn't be eligible for the December cutoff, but if there are openings after that, they would be. And then I think about the scenario of like Walmart, Amazon, Costco, Starbucks, and other global brands that are now within like a broadening consumer discretionary bucket. And I think that's a great example of how the NASDAQ 100 continues to broaden. And while we talk about it and it sounds buzzy, that benchmark of the 21st century, I think continues to make more and more sense. The one last thing that I'm in the habit of doing regularly, but particularly in December, is looking at NASDAQ 100 Next Generation Index. And essentially, the audience could think about that as like the Nasdaq 101 through 201 in market cap terms. And if you think about baseball, like I do probably too much, it's kind of like the farm system, like AAA. So where's the up and coming talent? And looking at names like that can give you some sense of where companies that have done well and are at that threshold that may be added in the future. I think that's valuable. And of course, I'm going to be looking for signs of whether index volatility continues to move higher or wanes into some sort of Santa Claus rally. So there's always something to be thankful for, and I'm looking forward to the next month.
All right, Kevin, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.